For
Welcome, everybody, to the Chinchilla Pickin' Podcast. It is September the 1st, 2022. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and as always, I'm here with Brandon Beaver. Brandon, how are you, man?
Well, first of all, I started the recording early. I didn't mean to. And then second of all, I just coughed right in the middle of your introduction and I tried to mute myself, but instead I accidentally hit the stop video thing. So you're going to hear my cough on the podcast.
It's fine because it's a live recording, and people need to hear us make mistakes every now and then to know that we're not pre-scripting this. You know what I mean?
What happens when you have to leave at 3:45 in the morning to get to work on time? I like it.
Anyways, I want to take the fluff here. We only get like a minute of fluff, right? So I want to cover a couple of things. If you're listening to this podcast and you live in Cincinnati area, on September the 17th, we have talked to the general manager at Starbucks off of Union Center Boulevard. Kirsten, thank you for allowing us to come in and steal the show in your store for a little bit. Saturday, September 17th, 11 a.m., we will be doing a live podcast live from Cincinnati, Ohio. We'll be doing a live podcast just for you guys. You come and listen to us live, ask some questions, show up 11 a.m. Union Center Boulevard, Starbucks, Saturday, September 17th. Again, it's 11 a.m. September 17th. We'll again announce this more and more as we get closer. We want everybody to show up if they live in the Cincinnati area. We look forward to talking to you guys, reaching out to you guys, and answering any questions. We do like a lightning round stuff. You guys head us for something real quick, and we'll see what we got for you. I know Brandon's really excited about that. So he loves crowds. So the more crowds, the better.
Speaking of Starbucks, it looks like Howard Schultz is going to attempt to retire again. Do you think this time it'll stick?
No. And I think you need to do your warm-up exercises next time. But yes, no, I do not believe he will. I do not believe he will let it go this time. And if he does let it go, he's going to take a smaller role inside the company. He'll still be involved somehow, some way. He's not going to fully walk away.
But if they try to move away from coffee sales to sell Yanni CDs again, then you'll probably see him come back.
Right? Yes.
Starbucks is one of my favorite companies, by the way, and Howard Schultz has been one of the best CEOs ever. Love him, hate him, dislike his politics, like his politics, whatever. The guy's got a heart, he's got a soul. And the company it's a good company. It's not a bad stock to have in your portfolio. And I'm sure the new CEO was probably vetted by Schultz. And I honestly, I don't remember the name of the guy. I just read about this right before we got on the show that they're getting a new CEO. But it'll be interesting to see if that sticks this time.
Yep, they announced him as well. So talking about politics, guys, we're going to try to keep these shows fixated on financial and income and how to grow your wealth.
Dave, who are you talking to? Are you talking to the listeners or to me?
Because that's what we're focused on. That's what we want to help you guys with. So we're bringing it back to some stocks here. Brandon, I got rules. Brandon and I get together 5 minutes. I should have done my warm-up exercises. I can't do this either. We get together 5 minutes before the show and we tell each other what we're going to talk about. You hear the live discussion here on the show for you. We have some actual stocks to get into, right? So I get to go first. And it's because we're going to cover a company that I have mentioned many, many, many times on the show. And I've always been a bull case for this company. I believe it was last week. I was on there and I said, I don't know. I actually said, I feel like I said, I can't tell anyone to buy this right now. I would wait. I feel like it's going down.
And then I said, I said, go ahead and I would buy it. But for the long term, the stock has taken a dip since we had that show. So far, you're right.
Yeah. I mean, the numbers didn't feel right. The macro event didn't feel right. Nothing felt right for this company. And I couldn't put my finger on it, but I was like, yeah, I just can't tell people to buy this company right now anymore. I just can't. I love this company. I've been a big supporter of it for years and years and years. Everybody knows this since our Facebook days. I think I mentioned it all the time in our Facebook group days. And this was one company I always push, and I just can't do anymore. So let's get to it. The company is Nvidia. Nvidia. So if you watch the news at all today, or you trade stock constantly, then you saw a lot about Nvidia today. Let us go into a couple of the things, some of the headlines, if you will, or some of the big statements of the day, and we could discuss them, Brandon. So one of the biggest events that happened today with Nvidia was they restricted exports to China of computer chips for AI. The H100 and A100 were specifically ones that were part of the impact, and they expect that to have a $400 million impact on potential sales for the current quarter. Yeah, I know, the current quarter. That's huge, man. And that's just two of their chips. But here's the thing that I read about that part was that's exporting to China. That's not exporting to the United States. That's exporting to China. That they're losing 400 million in sales going to China on that.
China's a big market.
China is a big market, and that just has to do with restrictions. Do you think these restrictions going to go away, or do you believe that the current relationship between China and US is going to keep them in place?
Nvidia's there's probably a deal with the government where they're going to get some exceptions here. It's still going to be a big hit. Think about this for a second. They forecasted, I think it was $6.7 billion for the year. $1.2 billion now, according to Nvidia, is in flux. Because $400 million, if you do the math on that, $400 million for one quarter, multiply it by 4, that's $1.2 billion.
Right.
So you got $1.2 billion now up in the air. That's 1/6 of their revenue for the year.
That's a huge chunk, man, just for these AI chips here. I mean, when it rains, it pours, right? Because there's a huge slowdown currently in China, which is also going to hurt business in the short term. As with every single country right now is seeing an economic slowdown globally, and most economies are putting or intentionally putting the brakes on the economy to get a tackle on inflation. And so you're going to see less demand, because when you go into a recession, nobody's going to be out there buying PlayStation 5s. Nobody's going to be out there buying Oculus VR sets. Nobody's going to be buying a new computer or PC or Mac that they don't really need. They're going to hold off and try to make it last longer. And then you're not going to see businesses are going to cut back and try to cut costs because their top line's dropping. They got to keep that bottom line the same. So they're going to cut costs in order to keep the bottom line the same. When you have that also added into it as a headwind for Nvidia, now do you see that 1.2 growing even more?
Yeah. With a recession, I for sure do. I think that a recession and change in consumer behavior, a lot of it's been priced into Nvidia right now, but obviously what wasn't priced in was the China situation, because that caught everybody off guard. I will say this, I got a lot of respect for Nvidia for publishing those numbers and saying, and being completely honest, saying that $400 million for the quarter is now up in the air. A lot of companies wouldn't have done that. A lot of companies would have just said, well, we're hoping to strike a deal with the United States government. It looks like right now we're not going to be able to ship to China. And the shareholders would have been left to do the math for themselves. So the fact that Nvidia was honest and said, wait a minute, guys, this is going to cost us $400 million this quarter alone. Big respect to the CEO and to the board and to the people for doing that of Nvidia, because they didn't have to. That's not a legal requirement to publish those kind of numbers. But yes, as far as like not buying the laptops, not buying the PlayStations and all that stuff, of course it's going to happen. The question is how much of it is already priced into the stock. And I still hold true to, I think you could buy the stock right now, and in 10 years, you'll be fine with it. But at the same time, do you want to hold off and wait for a better deal to come? Because it does look like we're going to probably go deeper into a recession. Not trying to get back into doom and gloom here again, but we've never had this high inflation and then come down off of it without having a steep recession. It's never happened. in the history
Right.
of ever. And all of the people that want to say it's different this time, every single time before we've gone into a recession, people have said it's different this time, and it's never been different this time, ever.
Yeah. So, all right, let me get it back to NVIDIA. I agree where you're going, but let me get it back to NVIDIA here because, yes, that was good of them to come out and admit these things. They could have waited for the next quarter's earnings report and then announced it then. It's better to get out of the way now, price it in the stock before you get to earnings seasons. It wasn't their turn to talk. I want to say that this isn't being felt just by NVIDIA. Like the whole sector, the Philadelphia chip index, right? It's down 16% since mid-August, and it's down 35% in year to date in 2022. That's a huge hit for all the chip semiconductors. They're all down. I bought Intel earlier this year thinking Intel was going to be a big winner. But I bought it for years out because they're building these U.S. plants right next to where they need to near the automakers and in that section of the Midwest. And I believe that was a good partnership for Intel. And I still believe that's a good partnership for Intel in the long term. Again, that was a long-term play. And I prefaced that back in the spring when I said this is what I'm looking at. I still believe in Intel for the long term in that regard. But NVIDIA, they're down. AMD's down. The whole sector's down here.
Yeah.
Everybody's hurting.
Micron's got a deal. I think it's in Idaho. They're going to be building a new factory.
Right. See, everybody's trying to build factories outside of China now because of everything that happened during the global pandemic. Let me get into some more news here because I'm not done with the reading off these headlines here, Brandon. So before you try to move on to another topic, let me read off some more of these headlines here. So you got now Ethereum, right? Everybody knows the cryptocurrency Ethereum. I'm not going to get into cryptocurrency, but I'm going to show how this applies to NVIDIA. Ethereum is now moving to staking, crypto staking instead of crypto mining. Now, without crypto mining, there's no demand for NVIDIA chips inside these crypto miners. And as more coins move to staking and away from mining, you're going to see a less demand for NVIDIA chips in crypto mining. You're going to have Bitcoin being almost left with the only big player on the field still doing mining and not staking because staking is more eco-friendly. And that's what these these chip currencies want to be known for is eco-friendly. But unfortunately, we don't know who are the founders or creators of Bitcoin. So there's nobody out there to go ahead and make that change for Bitcoin. But that's going to have an effect on NVIDIA as well. Are we doom and glooming on NVIDIA? Was there anything at all positive for NVIDIA today? Brandon tried to steal my thunder on this earlier. Yes, there was one positive note for NVIDIA today, right? So they do get to develop the H100 in China, which is the only. They get to continue developing that in China, which is going to be the only positive point I saw from NVIDIA today.
Okay,
that was it. That was all I saw.
So
was they get to keep continue developing.
So how much of that $400 million is now, made up for by the fact that they get to continue to manufacture that chip in China, I wonder.
I don't know because they were shipping because they were having to sell the H100 to China because they weren't making enough for China's economy. But now they get to continue making in China. It's like, okay, maybe we don't need to ship as much in now because we're making it there. So yes, that may have a dent in some of that 400 million, but I believe we have the overall sector being down. You have a slowdown in all world economies. You have the crypto miners moving away from them. You have NVIDIA with the restrictions on those two big chips, whether or not and it's not just those two, but those were the two biggest players of the field, right? So you have all these restrictions. I think there's too many headwinds and not enough tailwinds here to move the stock higher. And I reiterate what I said last week. I still cannot say it's a buy at this level. I am still waiting for more damage to be done to the stock before I get in. But I am looking to get in because I love NVIDIA, but I'm waiting for more damage to be done. And that's what I'm looking for. Thoughts, Brandon?
I don't blame you. I do think when we come out of this, though, that NVIDIA eventually will be a big winner again.
Well, yeah. I mean, all the semiconductors will be back on their winning spree once we come out the other side of this high inflation, high recession, well, not high recession, sorry, high inflation recession era we're in right now.
But you brought up something I actually didn't think about, and if cryptocurrency continues to go down, Bitcoin continues to go down in value, how much does that affect the processors and the chip companies?
I mean, it affects them a lot. Crypto miners buy a lot of computer parts, man. I mean, they spend a lot of money there. And a lot of these miners, these mining companies, recently, a lot of them went out of business. Some of them sold all their Bitcoin that they were sitting on in order to maintain their business, to continue moving forward. So that means, okay, what happens if this continues for a lengthy period of time and you have no more savings to dip into? Now you got to take out loans. Who's going to give you the loans?
Right.
Right?
Especially if
No
there's
one's
a
going to give you the
concern.
loans.
You know what? You know what? It kind of worries me a little bit that the consumer hasn't really been affected by the recession yet. You're seeing it in earnings. Earnings are the tip of the iceberg at the beginning of the recession. So it means that we haven't obviously had the recession be felt by people yet. So it's still coming. I mean, Lululemon just reported earnings that, looked like it knocked it out of the park.
So, all right.
The consumer's still
Here's my
strong,
thought,
so-
man. Here's my thought on the U.S. consumer right now. I believe they are feeling it. I believe we are. You still have a lot of retailers that are getting rid of inventories at low levels.
Oh, yeah, that's bad.
So they're shopping, they're getting deals. People are getting deals. As soon as the deals run out, I don't think you're gonna see a strong Christmas season as you would hope to see. Holiday season, sorry, as you would hope to see at this time. I believe it's gonna be slower. I don't think it's gonna be bad. You're still gonna see that holiday up, but it's not going to be as high as what we would expect it to be. Yeah. You're not going to get a Santa Claus rally.
No, and if you do, it'll be because of the discounts that retailers are being forced to put on things like apparel.
That, or we got inflation under control by then. I was thinking October. I was thinking the end of October, we would start to see the market start to bottom out, come back up. That's what I called back a few months ago or a month ago. I don't know if that's going to be reasonable. I'm just going to hold to it for right now, but I don't know if that's going to be feasible, man. I mean, we need some good numbers.
Yeah.
You'll see. I'll go into it later on with my other topic as to why these numbers aren't going to be as good as we thought.
I'm telling you, most of the time, deflation is more painful than inflation in the short term. It's a necessary evil, but for the regular everyday person, deflation is worse. That's when the job cuts come in. And that's when people can't spend money. That's when their savings accounts are drying up, and yeah, so the worst is yet to come, in my opinion. Go ahead, Dave.
That's when the job cuts come in. Have you been watching any of the stock news channels? Job cuts are already here, buddy. They are here across the board.
You know what's happening
across the board?
It's not really across the board because people are getting cut from their jobs, and then the next day they're getting recruited to something else.
Yeah, but they're not getting recruited to the same pay and level of job they had before. They're having to take a lower level job. Yes, because no one wanted to fill those jobs before. But now you have people who need a job. They see the recession. They are high inflation's hurting their pocketbook. They got to take that job. I've been saying this for 2 months now, or 2 or 3 months. I've been saying the exact same thing, dude. Like, we're gonna run out of those jobs as well, and that's when it's really gonna hurt. We had it too good for too long. We were able to go into work and we were able to tell our boss and say, look, I want this, that, and that, or I'm leaving. And the bosses would have to give us most of that, right? Nowadays, the tables have turned. Now you have Google, Facebook saying, hey, guys, I need you to do more for less, please, right now. And if they say, no, I don't want to, you're fired. Yeah. I mean, that's just basically it right now. The tables turned that quickly on the workers in this nation. And I'm telling you, we saw this in 2007, 2008 during that recession. I worked through that. I lived through that. I lived through the one in 2001. I worked through that. I lived through that. You know what I mean? It's like, guys, I've been through these recessions. I've seen what happens. We are the market's just not moving like it should right now. And it's I don't know why it's not. I feel like Michael Blurry or one of these other guys here that's sitting here going, like, I don't know why. When he was on, you ever see the movie from Michael Blurry, and he was going around and he was trying to tell people that the housing market was going to crash, and he goes, I don't know why the housing market hasn't already crashed. It should have crashed by now.
It could take a while.
And yeah, and I'm sitting here and I'm saying the same thing, and it's like I don't know why we haven't dipped and we're calling it a recession and we're not fixing the issues. Because I've been saying the same thing all year, Brandon. And you have too. You said that you don't think most people were. You said what 85% of people will not make a retail traders will not make a profit this year. That's what you called back in January. I mean, it's been a rough year for people, man, and we got to admit where we're at.
Okay, so James O'Shaughnessy from O'Shaughnessy Capital back in 2005 was saying the same thing that Michael Burry was. And he said it made no sense to buy stocks at that time. And he was taking profits and selling them. People were calling him crazy. And, well, I mean, he was 2 years early on it, but he was right.
Yeah, he was 2 years. I mean, but there at that time, there was a lot of manipulation in the market that had a lot to do with that. And it was sad to see, but that's the way it was. Let me move into my next part here that talks about why we're still going to see high inflation. Ready? Mm-hmm. Surprise, surprise, guys. It's a day after Wednesday, and I'm going to talk about oil. Right? Shocker to everybody who listens to us on a regular basis. So the oil numbers came out, and what I'm going to go over here is what they came out, and the barrels were actually down this week. The amount of barrels, crude inventories fell 3.3 million barrels this week, after falling 3.3 million barrels the previous weeks. We had 2 down weeks in a row, right? This brings our 5-year average to amount of oil inventories down 1.7% from a year ago, right? That's our 5-year average. And overall, our 5-year average for this time of year is down. Let's make sure I'm reading this right. So no, distilleries are down 7% from the 5-year average. Crude oil inventories are down 6% from the 5-year average. So everywhere we're down from the 5-year average of oil inventories right now. So our inventory levels are going down. What does that usually mean? So if you look at supply and demand, if anybody here is listening has a basic economic understanding, if you have fewer supply and demand is staying the same, then price is going to go up. Well, fortunately for everybody here, China's shutting down a lot of its economy right now because they're hitting a recession. So demand is staying about equal, but inventories are still dropping. So demand staying equal, but inventories are still dropping. So you should see the price of oil go up. What also is going to affect that is this week, Russia closed down Nord Stream, that little pipeline that feeds Europe. They closed it down saying, "Oh, we got to do some repairs on it." And I just find that funny that they're going to close down that. They're going to stop pumping in oil. I don't know if they opened it back up yet, but they closed it down 2 days ago, and they said we got to do repairs on it. And I'm not going to say whether or not they had to do repairs or not. I'm not out there. I'm not looking at that pipeline, but I'm going to say, look, they shut down the pipeline nonetheless. That's going to cut down oil. You didn't see it in the numbers this week, but you'll see it in the numbers next week. Also, OPEC, they are cutting their output. They announced that they're going to continue making cuts to their output. That's going to continue to also cut down on inventories. Inventories are already down. Now you have 2 sets of news that have not been added into the numbers that will be added into the numbers going forward. Are we going to see 3 straight weeks of negative inventories? Is that what's going to happen? Because if we do that, guess what you're going to see? You're going to see inflation go up because the price of oil is going to go up. So all that gains, quote unquote, that we got from oil dropping to help the inflation number is going to be disappeared, and inflation is going to go right back up.
So you're saying we should buy oil and buy oil companies, maybe?
Right. And I would. I am. I will tell you right now. I will look you guys all in the eye right now and say, buy an oil company today. It is September the 1st at 5:40 p.m. Buy an oil company today.
Who should it be? Occidental, Chevron.
Occidental's a good one because Buffett owns that, but you got Exxon, you got Chevron. If you're a penny stock trader, I guess you could look at Rig. I wouldn't go for Rig personally. I would stay away from Rig, but Apache would be also another one. But Apache again, that's for offshore drilling. Maybe just stick with the basic plays: Exxon, Conoco, Chevron, and Occidental. Those big guys. Those are the best ones to play. They're safest ones to play.
What do you think that's going to do to prices of steel and other commodities?
It's going to make them all go up. I mean, but they've already had this price in, and they have not lowered the price. And we reported on this 2 weeks ago, Brandon, when the inflation number came in. I covered the fact in our podcast that, you know, the cost that these companies are accruing has come down because oil has come down, but they have not lowered their prices yet. So they have kept their prices the same. So they're going to be just fine. They've got this built in.
Up until last week, I had called U.S. Steel a buy, and up until last week, it was up about 20%. Since then, it's given back almost all of those gains. So maybe if you're buying oil, buy some U.S. Steel as well.
Right. But this is what's also going to,
in this situation. So, you know, the first step would, of course, to be buy oil, but, you know, U.S. Steel could be an option as well.
I'm just saying, I look at this, you know, I see a high inflation number coming out higher, maybe not for September, but for October.
Yeah.
And that's why I don't know if I can stick with my call of bottoming out in October, because we might see a higher inflation go back up for the when we report in October. I mean, so that's basically it for oil, man. That's where I think it's going to be head. That's my play on oil. That's what I think is going to happen. There you go. Brandon, what else you got for us?
All right. So last week I spent some time on Paramount Global. Warren Buffett's been buying it up. The stock is at a value in the value range under a good price to book and it's got a good price to sales under 1. I have decided not to buy it actually. And here's the reason. It is not big enough to be competitive with Netflix. It is not big enough to be competitive with Hulu. Out of all the streaming services, I honestly think Hulu has the best potential. It's owned by Disney, which also has the best movies right now, in my opinion. And they've got Marvel. By the way, let me just add this real quick. I found out today that Paramount, the first Iron Man, owned Marvel, and they did not re-sign a deal with Marvel, so it went to Disney. Big mistake. Go ahead.
I just want to point out that Disney does not own 100% of Hulu.
It's like 60%.
Yeah, Disney has majority stake in Hulu, but they don't own all of Hulu.
It's enough to be called the parent company.
Yes.
Another thing that I found out, and this is kind of small potatoes here, but it put a chip on my shoulder, made me a little bit irritated because I signed up for Paramount Plus for Big Brother, right? But then I got excited about it because I thought to myself, oh, this Yellowstone that everybody's talking about, Yellowstone's a CBS program. It'll be on Paramount Plus, right? No. They sold it to Peacock. How short-sighted.
Yep.
How short-sighted.
They have a big following too.
Endless revenue streams from these very popular shows that people would love to binge watch, and you sold it to Peacock.
Right.
So small potatoes. Paramount is nothing. It's not at all what it used to be in the 90s. It used to be like it was the cream of the crop for movie studios. And now when you compare it to Netflix and Disney, it's small potatoes. And the only reason I could say buy this stock is because you are buying it for less than its sales, which is good. But I also found out that Summer Redstone, the guy who used to own Paramount when I think it was CBS and Viacom took over Paramount, he passed on the company to his daughter, and his daughter Sherry, who's apparently a very smart, very intelligent businesswoman, and she's the one who created Paramount Plus. That's great and everything, but she is absolutely in love with Paramount, and she finds that like it was almost like a family heirloom to her. So if you're ever hoping for a buyout of Paramount to actually get your dollar's worth that you should get from the stock, unfortunately, things are probably going to get a whole lot worse for them before there's a buyout. It would have to be forced from her hands, and that's not good for me.
Gotcha. I have in all the years I've been trading stocks or investing with stocks, I've not really invested much with media companies.
Yeah.
I will say that you see a good quarter reported from media companies during election cycles because they make all that extra ad revenue just flooding in. And right now you're going to have huge floods of ads being shoved in all our faces. I know as Americans, we love this time of year, right? Lots of ads being thrown at me, robo phone calls, ads coming up. That's all going to be started next month. October is just going to be full of ads. These media companies are going to be having tons of money at their disposal.
Yeah.
But
Well,
what do they do? What do they do with the funds? Is going to be the question of the future of some of these streaming services or these companies, media companies.
it's not that Paramount can't become competitive. I mean, they've got the SpongeBob SquarePants and all of that from Nickelodeon, and that's very popular. They've got a huge movie library. I mean, I'm going to make you a deal. I can't, I was going to do the Godfather impression, but I'm so far off. I'm worse than Seinfeld on the Godfather impression, but they've got the Godfather. So they've got a huge arsenal of content that they could put on Paramount Plus to be competitive. But at the end of the day, they still have CBS. They've still got MTV. Does VH1 even still exist? I don't know. And
I haven't watched one of those music stations. I'll tell you how old I am. I have not watched one of those music stations since probably like 2004,
nobody has though.
2003, 2004. That's
Nobody
probably
has.
the last time.
Kids that were born in 2004 haven't watched it since 2004. Bad now. So do you really want to buy a company that is holding on to a cable industry that is dying? I don't think so. I thought about it last week, and Buffett had bought it, and it kind of put me in love with the stock for a minute, and then I rethought it, and I just didn't.
Now here's my question: as Buffett is getting older and moving on, I'm sure he's less involved with the decisions of the company. Do you believe that's a Buffett buy, or do you believe that's one of the people that are going to be taking over the company after he moves on buy?
Honestly, I don't know, but the sniff test tells me that it might be a Buffett buy, not because it's old world media, but because it's a Ben Graham style buy. Benjamin
Gotcha.
Graham, Buffett's mentor, he would buy companies even when they were on the downturn if they were at a value, price to sales was below 1. It didn't matter what company it was to him. Buffett, it's mattered a little bit more, but he does the same thing sometimes. And there's a good chance that somebody makes a play for Paramount, but I've read so many articles, and I've listened to podcasts on this in the past week, and I've heard that Sherry Redstone, she's so in love with the company, which is a good thing as a CEO, but it also means she's not up for sale.
Gotcha.
And it would have to be really bad. It would have to be much worse than it is right now. The stock would have to take a much bigger hit for her to think about selling. So, if you're looking for a takeover deal, maybe wait for it to get hit harder. I don't know.
Right. Talking about takeover deals, Activision and Microsoft having trouble in the UK courts, saying that is antitrust. Will that deal ever get done? I don't know. My money's tied up in it. I hope so.
But yeah, and so is mine, and I bought more over the past week. But the UK courts and the European courts always have this situation with big tech. And I'm not even certain what jurisdiction they have over it with 2
We'll
US
see.
companies. So I don't even know if they can even do anything about it, really.
We'll see. All right, man. Final thought, Brandon.
We're bearish on the short term. I'm always bullish on the long term. I always think that we're going to come out of it on the other end. I've said this 1,000 times, a million times actually. I do want to add. I'm just going to reiterate that Disney's still on my buy list.
There you go.
But,
Final thought from me. I still go ahead.
I mean, yeah, Top Gun came out, and Top Gun surprised everybody that 30 some odd year movie hit the sequel to it hit the top jackpot, and that was Paramount. But as far as content, and as far as franchises go, right now, Disney is king. And the parks are reopened.
There you go. I'm going to wait for you to say you're done this time.
I'm done.
All right. Final thought for me is I still can't say Nvidia is a buy. I'm waiting for more damage to be done to this company before I go ahead and buy in. Oil should be moving higher in price, so oil companies would look like a good buy right now based off all the news we're seeing it. You're not going to see it in the numbers this week. You'll see it in the numbers probably next week. You may see oil move higher tomorrow. You may not. I don't know. There's just too many other news, smaller macro events that happened. I don't want to get into on the show. That I believe are also going to play an effect on the oil price going higher. So that's what I'm looking at as far as that goes. That's my calls. Other than that, I'm sitting on an amount of cash. I'm waiting to buy in, but I believe there's more damage to this overall market. I'm like Brandon, I'm a bear in the short term, but I am always bullish on America in the long term right now. All right, guys.
Wait. Can I give one more final thought?
Go ahead.
Okay, so we're not like some people. We're not like some analysts that jump on TV and say, I'd like to say there's always a bull market somewhere, and I promise to help you find it. And then we go on for an hour and do nothing of the sort. Dave just gave you a bull market.
There you go. Yeah, you're right. And we hope to see you guys, if you're in Cincinnati, on September 17th at 11 a.m. We hope to see you at the Union Center Boulevard Starbucks. Come and join us. We don't know if anyone will show or maybe hundreds will show. Who knows? We have lots of listeners in the local area. Please come join us, say hi, grab a cup of coffee. Maybe we'll buy you a cup of coffee. Maybe. But you have to show up to find out, right? So show up, find out, come meet us, come hang out with us, come ask us some questions during our live podcast. We would love that. But as always, we hope we've been entertaining, educational, and uplifting, because we want everyone to make money. Have a good night.
Have a good night.